Have you ever wondered where you should be selling your Harmony One? If so, you're in luck because today we're going to be exploring just that. I'll be sharing my thoughts and opinions as to where I would be looking to liquidate my Harmony One in 2025. As I get into this, smash the like button, subscribe if you're new, and let's check out what's going on with Harmony One. So here we have Harmony paired up with USDT. We're on the 1-day Binance chart, and it's a very interesting chart. There's lots of really interesting things that have happened over the years, specifically since our last kind of I guess bullish run for the one token. And while things are still looking very promising, in my humble opinion, for where things could be going in 2025. So we obviously need to get a good idea as to kind of where our expectations might go, where we think the price action may go, where we could liquidate our positions and basically make a profit, right? That's what this video is all about. In order to do that, we are going to use two tools. We're going to use the Fibonacci retracement tool. This is a critical one. It's basically very, very useful for being able to kind of predict out where the market is likely to go based on the kind of psychology of retail investors, but also how traders would look at the market. This is a slightly altered Fibonacci retracement tool. It's not your standard one. I have made some amendments, so I'll bring the settings up right here so that you can see exactly what is going on there. Okay, so I've removed all the horrible colors. We don't have any of those problems or anything like that. It's easy to see. I've made everything nice and white. I've also changed some of the settings, removed a lot of the numbers that I did not need, and kept all the things that I do need. These numbers, feel free to pause the video if you want to get a hold of them, but they are basically 0, 0.236, 0.382, 0.5, 0.618, 0.786, 1, 1.618, 1.382, 1.236, 0.702, sorry, and 0.882. And then from time to time, I have this one here on, which is a 1.272. I turn it off for the majority of the time though, because it does clutter up the chart and I don't need it unless there's a specific type of corrective pattern that is in play, in which case I would turn that on. But for the most part, I would turn it off. The most important setting is actually scrolled all the way to the very bottom here, which is the fib levels based on log scale. This is off by default, and I use a logarithmic chart, so therefore I must have this turned on. So it's off by default, so you have to go ahead and go into your settings and turn that on, even if you don't make any other alterations to your Fibonacci retracement tool. This is essential, otherwise you're going to get the wrong numbers, as you can see here, just what it looks like with it turned off. And as I say, it is off by default. Logarithmic chart is this one down here. If you turn that off, you can see how the chart disappears from view. I'll put that into auto. This is what it looks like this is logarithmic off, this is logarithmic on, off, on, off, on. It makes it easier when it is on to see what is going on, okay? I always turn auto off as well. So that is your first tool that we're going to use, okay? Fibonacci retracement tools. They're very, very powerful, very useful. The other one is Elliott wave. Elliott wave is very, very predictive as long as you get it correct. It's a very complicated subject. Elliott wave in itself is like blockchain, in my humble opinion. It has a rule for everything, right? So as long as you're applying it to a highly liquid market, it will be 100% back tested, right? It will be 100% correct because there's a rule for absolutely every single structure. Okay, the problem with Elliott wave is it's so complicated that a lot of people don't apply it correctly, and then they say that Elliott wave doesn't work. Well, Elliott wave does work as a structure and a pattern for absolutely everything that could potentially unfold, with the exception of low liquid markets. If you've got spiky wicks going up and down all over the place, well, Elliott wave isn't going to help you there because it can't track that kind of volatility. But if there's a highly liquid market where the volatility is within scope, well, Elliott wave becomes very predictive and it's very, very powerful. So that's the two tools that we're going to use in today's video. Okay, so now we have all of that in our minds. Let's take a look at Harmony One here and see what happened in that previous bullish market and what takeaways we can take from this and apply it to the upcoming 2025 run. So the first thing we want to do is we need to ascertain where the top is here, because there's two wicks here that are very, very close. This could be a double top classic bearish pattern, and obviously it is for what we saw moving to the downside. So our high comes in at 38 cents in 2021, and then we had a move up here in 2022, which was a high of 37.89 0.07. So that is in fact lower. So we have our top there basically coming in on the 26th of October 2021 at 38 cents. Pretty phenomenal run, by the way, guys, for those who were not familiar or were not around in 2020 and 2021. This was a fantastic run to the upside where we saw Harmony One rally by 32,000%. Very, very good. The moves here are interesting. So if we measure our structures for using our Fibonacci retracement tool here and Elliott wave scenario, if we go ahead and take this and we move it over to here, we can see that this did indeed reach. I'm just going to go ahead and pull that across. Let's take a look at this in a little bit more detail here. So you can see that our Fibonacci retracement tool here did indeed reach that 1.618 level. Now I just need to go ahead and check down here because that low came in a little bit lower, and then you can see that we did indeed pierce by above 1.618. Because of that, it led us up into this last little final finishing move, which if we go ahead and measure this, we could see here that it did actually peak a little bit higher than expectations, but we were looking for actually it didn't, sorry, that's my bad, I was looking at the wrong number there. It actually lands exactly in the expected range, which was between 32 and 58 cents. So you can see that that's kind of a very interesting kind of way using the Fibonacci charts and Elliott wave. My point here is that this is a 5-wave impulsive breakout pattern hitting those key Fibonacci levels. So you have your wave 1, your wave 2, your wave 3, your wave 4, and your final finishing wave 5. Now, this is really important to understand because 5-wave patterns are never on their own. They are a part of bigger macro structures, okay? And that's what's going to pay close attention to what is happening most recently with that price action, because 5-wave patterns, let me get some empty space just up here for a little brief education, okay? 5-wave patterns are always, and bare minimum, you're going to have 2 of them, okay? They look like this, and they're going to be joined by a 3-wave pattern like this. This is known as a zigzag. An A wave up, B wave down, C wave up in this case, can go in both directions. They call them inverted zigzags otherwise, but personally I think that's just a little bit overkill. And you can see here that you'd have a 5, 3, 5. It's a 5, 3, 5 pattern that is known as ABC or zigzag. Okay, so that's really important because that means that Harmony One, considering it finished a 5th wave movement up here, it has kind of bearish move to the downside, yes, but should be looking for the next 5-wave move. The only way to break out of this structure is that maybe there's something that I've missed in terms of the historical movement that I can't see on this Binance chart, or alternatively, we have a breakdown lower than 0.00118. Now, I don't think that's highly likely. We can see right here that we have a very interesting structure. So this video is about where to sell. Well, knowing this allows us now to take a Fibonacci approach to the charts and allows us to basically predict out where we think the price action is going and where we want to be thinking about selling. To do that, I've measured from the top to the bottom here. So we have 100% of this move, that 32,000% move. I'm going to pick it up and I'm going to go find the bear market low point, which I think is this one right over here, which comes in on the low of the 5th of August. And that was a low of 0.00850. Okay, so I'm going to use the arrows on my keyboard and I'm just going to nudge down our Fibonacci chart here. He says, let me bring that back up. I'm going to nudge this down until it actually gets exactly what I'm looking for, which is 0.00850. And because it is a little bit fiddly, I'm going to zoom right in here and I'm going to go ahead and pick this up and try to drop that right on where I need it, right there. Okay, so that, let me zoom back out so we can see exactly what's going on. That there then gives us our Fibonacci levels with areas of our, where we want to be thinking about maybe exiting our positions in profit. Now, there's a bullish bull market high target, which would say up here, right? It would basically be quite an interesting one, right? $2.70 to $10 range for Harmony One. Unless something fundamentally changes with the project that I can see why we might have huge amount of adoption and shrinkage of supply, increasing in demand, that's the only way that this kind of target comes into fruition. Elliott wave tells us that's the potential, but it doesn't tell us that it's going to happen. It's no guarantee, right? The minimum expectation from an Elliott wave point of view is 38 cents, double top with what we saw previously. And of course, we do have to consider the bearish market and everything that happened there as well. For the most part, I'm not too concerned about it. It's very corrective in how some of this played out. Some big impulsive moves to the downside, yes. Some corrective actions, and then more kind of corrective actions as well. So it's very choppy, and that's actually a pretty good sign about things to kind of come. But nonetheless, we now need to focus on the point of today's video, which is where do we look to lock in those profits? Where do we want to be thinking about, our kind of selling our positions? Well, for this, I want to take a dollar cost averaging out perspective, like we would dollar cost average in. And using the Fibonacci chart here, we can actually be quite predictive over where we want to lock in those gains. Specifically because the market will like to react to these levels. Okay, so for this, we are going to draw in a couple of ranges, and we use ranges because we can be then kind of scoping out more specific targets within each range if you want, but it gives us the ability to be a little bit more flexible. Okay, and obviously I'll give the ranges and you guys can do with this information however you see fit. I'm not a financial advisor, I'm just sharing my thoughts and opinions on how I would approach this when it comes to Harmony 1. Okay, now we're pretty well invested. We obviously run the stake pool for Harmony 1, so if you're not already delegated or you're looking to delegate to a different stake pool, why don't you check out the cheek pool? It's usually linked in the description down below. Or the cheeky crypto Harmony 1 pool. I think we called it Cheeky One, actually, thinking about it. It's been set up so many years ago, I actually forget the actual name of it. But yeah, it's Cheeky One, it's pretty certain that's what it is. So in here, I'm just going to go ahead and draw in some rough targets. Okay, so this gives us some ideas as to kind of what we might be thinking about where to kind of take some profit on Harmony 1. Okay, now we want to do this gradually and slowly. We don't want to do it, 100% right at the beginning and miss out on the gains. Likewise, we don't want to do 100% of your position at the top here and potentially never hit it and basically carry it into a bear market. So how do we do this? Well, we're going to probably start with about 10%. We like to start off small. Down here between 3.3 cents and 7.7 cents. Okay, we'll then probably crank that up to about 20%, okay, as we kind of go up a little bit higher, as we kind of get to 15 to 30 cent level. Okay, once we kind of break above that area, we will be targeting out 48 cents to 79 cents. And I'm going to be pretty extreme at this level because we've already locked in 30%, but at this point here, I'm probably going to go ahead and do something like 40%, okay, because that to me is kind of like the bulk of where I think we're going to see a lot of resistance coming in for Harmony 1. Okay, so at this point here, these levels, what have we done? Well, we've actually liquidated 70% of our crypto bags. Okay, that means we have 30% left. How else would we do this? Well, we might go, okay, well, let's put 20% up here and then 10% up here. Okay, and this allows you to lock in the bulk of your kind of profit taking at the more realistic levels, but still leave some running should we hit those higher targets. Between $1.37 and $2.71, we might take 20%. And if the price does in fact move out towards $5 to $10, well, we still have skin in the game to take advantage of that, and be that just 10%, which it doesn't matter if we don't achieve those targets. The main point here is that we want to DCA out of the market like we would have DCA'd into the market. So we've done all the work of slowly buying up all that fear that we saw in the bear market, and then, not do the same as we start to sell it off to people who think that price is going higher. Well, to me, it would be foolish not to kind of approach it in this kind of way. But of course, it's just my thoughts and opinions on the data in the charts as I see it. What do you think? You can let me know in the comments down below, or better still, join us in our free Discord server and we can continue the conversations down there. If you found this useful and informative, smash that like button. If you're new, subscribe. And guys, if you haven't done so already, check out that video right there. It's one you probably don't want to miss.